Let's get some more fundamental view then. Arindam Ghosh joins in, MD and CEO of Blackridge Capital Advisors. Arindam, hi, afternoon. Really bad day for the market. For last 2 or 3 days, it did look like while there was short covering, there was some genuine buying which is coming back. Today, that almost every bull's back would have been broken. How do you approach the market from now on with 200-point fall on the Nifty?
No, clearly, I think what we are witnessing right now, of course, today it's more out of the overnight data that we have seen coming from US as far as the labor market is concerned. We have already seen the overnight yields hardening a bit. So some kind of an emerging market sell-off. We've already seen countries and economies with higher current account deficit getting impacted, and of course, India is at the forefront, so it's kind of bearing the bulk of the onslaught. So clearly, the capitalization that we have seen in the broader market is now kind of feeding it into the large caps as well, and it looks as if there is really no place to hide for the moment.
Arindam, if in case the Fed tapering does begin by, and if you could give us a timeline on the probability of that starting as well, how much more pressure do you think emerging markets such as India could face, or do you think that the asset reallocation is already done?
No, I think given the data that is coming out of US, clearly, one thing is very certain that as we get into the September, volatility is going to increase, tapering is going to start. So markets are going to remain extremely choppy. Portfolio is going to get adjusted and rebalanced. We've seen a fair amount of that happening, but I think there is more to come. We've seen the market holding up on the back of some few large cap stocks. So that has to correct. The economy has actually been going through a lot of grind and challenge, whereas if you look at the Nifty and the Sensex level, it's been holding up. So I think it's kind of the Sensex and the Nifty kind of playing catch up to what's been happening, the carnage that we have seen happening in the broader market. So going forward, it could well be that there is more downside which is expected, because the momentum on the downside appears to be quite strong, and probably that is going to continue till actually we get to see some kind of a reversal of interest rate cycle or something like that happening towards after 2 or 3 quarters from here.
Yeah, Arindam, that's an interesting point you raised, because the broader market in India is back to 2009 kind of zone. In fact, some stocks are down to 2003, 2004 kind of levels. Somehow the market was still holding on because a couple of sectors like IT, pharma and FMCG were holding on, even private banks. Now, private banks have cracked. What about IT and pharma? Do investors still continue to put money there, or at some point do we expect crack over there as well?
See, our sense is that overall, the dollar is going to continue to remain strong, and I think with the kind of recovery that we are seeing in the US, the other currencies, including the rupee, is going to stay under pressure. So clearly, in that kind of a situation, some of the export-led sectors obviously will continue to remain beneficiary. Purely on account of the fact that currency is going to weaken from here, not on the back of fundamentals. So whichever way you look at it, valuations are extremely expensive. So that's been the favorite shelter. But having said that, I think investors should be cautious. I think asset allocation is going to be the biggest challenge, whichever asset class you look at. Whether it is equity or whether it's fixed income. In India also, we have seen what has happened to the bond yields and the impact on some of the on the debt side. You see how gold as an asset class obviously has slid off the radar. Equity, if you look at 5 years data, obviously there's nothing that can excite investors to come back to equity in a hurry. But having said that, I think one needs to take a longer-term view. I think, over my, 20 years plus in the stock market, we have seen different cycles. I think one should not actually, panic. Every, chaos or this kind of a panic should be used as an opportunity, but no, this is not the level to really buy into stocks right now. I think investors should be well advised to kind of, see through this period, keep, the powder dry, and as in how, we see some kind of a stability. Probably that will come in after, we see the tapering of the kiwi getting announced. Probably that's the time to kind of, get into long positions.
Okay, we're done.
Arindam, at any point, if someone would have bought some of the beaten down stocks, cyclicals, for example, BHL, for example, looking at the value parameter, they would have lost money. So what would convince now, that, maybe you should go out and buy this market? Because it doesn't look like the ticker is not showing any signs of stability.
So I think, whether, it's cyclicals or defensives, clearly the situation that we are in right now is not really the time to buy. There is tremendous amount of value which is kind of emerging, but clearly, when markets get into this kind of a free fall, it is better to stay away, do a bit of fence sitting, and then probably get back into the market when there is some kind of a stability or a direction coming into the market. I think right now there's fair amount of I would say insanity in the market. It's a deadly cocktail of global factors, domestic factors, which I think is kind of compounding the panic. So I think the first step, a requirement, I think from an investor's point of view, is to kind of stay calm. I think in any kind of a cyclical or cycles, we would always see over a certain with a regular frequency this kind of situation happening. But clearly, I think given where we are today, one should wait and watch out.
Right. Arindam, I'm just going to interrupt you. I just wanted to quickly put a question in. In terms of trade today, have you heard anecdotally whether there is any sort of FII redemption which is happening on the equity side as well as on the debt side?
Well, I will not be able to comment on that. One would have to really, wait for the day-end data to make an assessment of that.
All right, Arindam, thanks a lot for that quick take.